Welcome to Money Talks. I'm Genevieve Westcott with your latest financial news from across New Zealand and around the globe. Coming up, politics remains center stage as countries around the world sigh a breath of relief because of that crucial Greek election on Sunday. But will the Greeks be able to negotiate a new bailout deal with Europe? Here at home, the Reserve Bank leaves our interest rates unchanged. What's its latest speculation about GDP growth for our economy next year? And National Field Days have come and gone. What's it tell us about farmer confidence? Joining us on the show today is Steve Jurkovich, Executive General Manager Commercial and Rural for ASB, and Tony Alexander, Chief Economist for the BNZ. Gentlemen, great to have you both on the show, the Battle of the Banks. Now, you were both at Field Day. Steve, your impressions, first of all.
I think overall sort of cautious optimism. I think most people felt like things were travelling pretty well for them. I wouldn't say they were out spending big time, but certainly great participation. I think the overall numbers were very strong. For us, it's really about sustaining relationships that we've already made, probably out in the field. But the real sense I got was how people thought things were looking pretty good. Looking forward to, after a great season, hopefully getting through the vote and understanding what's next for their business.
Now, Tony, I know you always put in a lot of time on the ground as well there. What was your take on how farmers are feeling generally?
Yeah, how they're feeling generally. There's an element of caution, but I thought about it for probably the whole 3 days and decided the best word was professionalism. There's definitely not outright closing of the checkbooks, pessimism, but there's not, she's all going to be all go, optimism, let's go out and buy an orange tractor because I've only got red and yellow sort of thing. There's a focus on what they need on the farm, selecting between different suppliers for it, and focusing on their getting through this season when they see the prices coming down, but the currency's still strong. They know they're coming off a very strong grass-growing season, so an element of caution, but overall professionalism, I'd say.
Did you see any big-ticket purchases being made?
Well, it looked to me like some of the vehicle sales areas, you know, Hyundai and others look very busy. So
that is right. One of the retailers apparently said, one of the car dealers said that last year he sold 11 vehicles, this year 50.
Probably talks to Tony's point a bit, I guess, which is, you know, people are replacing things and being reasonably cautious, but knowing that, you know, they have to stay on top of things, they have to stay on top of their investment cycle. You know, I think they've paid down debt over the last few years. They've probably got a bit more headroom, and they're taking a reasonably cautious approach, but still knowing that, you know, it's time to spend some money.
Gentlemen, let me pick your brains. We know that dairy, wool and meat prices are all trending down. When is that going to stop? What are you picking?
Well, I think for us, you know, we are picking that it's going to come off. I think for us, it's a little bit hard at the moment to pick just how much, and there's quite a few moving parts. So I think from our perspective, farmers are expecting a lower payout, perhaps not as low as some people are talking about. But for us, I mean, I think it's really about looking through the cycle and say, look, on the long-term averages, these are still strong results. From a banking point of view, we just need to make sure that we do take a long-term view like our customers are.
Now, we know when it comes to dairy farmers as well, they may be cautious because Fonterra, for example, is saying that all the waterways have to be fenced off. I mean, it comes down to new compliance costs by the end of the year. How is that going to affect farmers economically, do you think, Tony?
Well, any new thing put on top, you know, a cost, as it were, just hits your bottom line. But I find farmers have always been extremely well aware of the environment and very disappointed at the other farmers that let them down in terms of waterway pollution or letting the plastic wrapping go around the place. So I think most of them are definitely in favour of that sort of process. And, well, they've got no choice. If you're going to be a Fonterra supplier, you've got to meet the rules, essentially. So it's just part of the nature of being a dairy farmer in a country which prides itself on its environmental cleanliness, while recognising there's a bit of a clean-up still needed. Now,
listen, let's talk a little bit about the wider New Zealand economy. And, of course, we saw the official cash rate just a few days ago remains unchanged. No big surprises there, I suppose. But this means almost 3 years of low interest rates. Is it going to go lower?
Well, I think that's, I mean, Tony's the expert, he does it as a day job, but certainly we're picking that it's going to be a long time before things change. And, you know, there seems to be, certainly market this morning, still pricing and perhaps an easing. So, look, it's really hard to pick, but I think when you look around the world, you don't see things going well. So it's hard to see us, you know, bumping rates up, I think.
I was somewhat surprised to hear last week before a select committee, one of the Treasury's top guys saying publicly, we could be looking at a depression and it's going to be 4 to 5 years before things start to get better here in New Zealand. What do you make of that?
Right, first of all, I wouldn't go down the depression route.
You don't buy it?
No, don't buy it. Didn't buy it back in 08.
Not for New Zealand, but I'm talking globally.
No, not globally. There won't be a depression because there are still resources available to fight that scenario in terms of, printing money to try and keep the banking system liquid around the planet. The Americans have addressed the bulk of their banking issues, and this is where the Europeans are sort of lagging behind. The Europeans this time around are showing the world this is not how you do it. They've had 3.5 years of trying to get a bit of economic reform going, reforming their banking sector, getting government finances under control, and they haven't really taken advantage of that period of time. And the markets are saying you should have done more, and so we have them backing away from those Spanish government bonds in particular. Now, I think it is going to be a very rough environment, and I might have said here about a month ago the comment from the British Prime Minister, he doesn't think we're yet halfway through the European debt crisis, for instance. Yeah,
I noticed that Finance Minister Bill English was doing some backpedaling and trying to make it sound not as bad as that. But really, I think the government's been selling us a crock, quite frankly. Don't you?
Well, no, I think they've been a bit over-optimistic on the achieving the fiscal surplus, target 2014.
A bit. A lot.
It was always going to be pushed out by basically a year, if not 2 years. We saw somebody forecasting just the other day. That's neither here nor there. The government's debt in New Zealand is relatively low by world standards, but they are under pressure, not because people overseas are unwilling to finance the New Zealand government debt. Basically, people like the look of New Zealand and want exposure here. It's more that they need to start building up fiscal buffers, return to surplus for the next earthquake when it comes along. If we get a foot and mouth rumour, for instance, building up reserves for the health and the pension costs for the ageing population. So New Zealand has big government bills coming along, and we do need to return to surplus, but we don't have to do it at the speed of the Spaniards, the Greeks, etc.
I see that the New Zealand government now, meaning us, you and me, emptied our pockets a little more for the IMF, the International Monetary Fund. They need money to help out in Europe. Guess where that money's gone? Well, to Spain, the Spanish banks.
I think realistically no one can stand on the sidelines, Genevieve, to be honest. I think, globally we're all in it together, and as Tony touches on, if the markets start to sense that you're not prepared to, go on that diet today rather than tomorrow, I think, the markets start to sense a lack of confidence that the government's not going to make the hard choices. So I do think it makes sense. I think building the buffer zone, I think this morning it was sort of nearly 400 billion euro that they're trying to build up. So, it's a considerable amount of money, but if you think any sort of systemic issues, that money's going to be gone pretty quick. So I think it makes sense for us to be making the contribution we can. It's going to be interesting to see what people want for their contribution. There was already a few countries saying I'd like to vote on where this money goes. I think the real challenge for, Greece and Spain is some of the things you have to do are very hard. And I think like most of us that perhaps could do with losing a few kilos like myself, you want to go on a diet tomorrow or next month or the 2 months or 6 months.
Tony, don't we think he's perfect?
He's all right.
But that's the choice, right?
More to cuddle.
The Greece thing and the Spain thing, I think it really comes down to a promise of a better tomorrow. But that means that today is going to be really hard, and no one really wants to make those choices.
Let's talk about farmers, though, and agribusiness here at home. What's your best advice to them, knowing that the next 4 or 5 years are going to be darn rocky?
Well, I think, the fundamentals haven't changed. I think Tony talked about it before, and which is, have a long-term view, really understand what you're trying to achieve, what your plan is going to be. And I think, we're seeing, particularly with the bigger end of farmers, really starting to leverage external expertise. So I think, they don't have to know everything. They're really leveraging experts, farm managers, science to make sure they're getting everything they can out of their business. I think that's really key. I think where we see trouble sometimes is where customers are sort of outgrowing their expertise to some extent. And I'd say the most capable, most confident farming families are prepared to go out and speak to their banker and their accountant and their farm advisor and say, look, is there stuff we should be doing different? I think also they are more cautious, so they, the revaluations of their properties aren't flowing through like they were, so they're not gearing up against a better tomorrow, to put it that way. So I think overall it looks pretty strong for them, but I still think they are saying, hey, look, volatility is going to be a big part of our business for a long time now. I think if you've worked in financial markets, you're used to it. And, we've got guys who sit in front of the screens every day seeing things bounce around. Farmers aren't as used to that, so they're getting used to it. And I think that's really something they have to adjust their business for and make sure they've got enough headroom, so in tough times They don't have to make bad decisions about getting rid of, things that they've invested heavily in. And in good times, it's not too frothy and they're not going out and spending everything.
Thanks, gentlemen. Coming up after the break, how will our weaker agricultural commodity export prices weigh on economic activity despite a good year for rural production? State assets could be up in the chopping block and sold to the highest bidder in the next month or two. But just how much higher could our electricity prices go? And Fonterra's top men travel the length and breadth of the country, trying to convince farmers why they should vote for the contentious Trading Among Farmers on June 25th. But first, Field Day's organizers are declaring the event a huge success, with the last 4 days of the International Trade Show drawing in more than 128,000 visitors. It seems the final day really packed them in, up 40% from the previous year. So answer this in our Farmers Facts and Figures quiz. How many visitors went through the gates of Mystery Creek on its last day? The answer when we return. Stay with us. Welcome back to Money Talks. Just before the break, we asked you how many visitors went through the gates at Mystery Creek on its last day. 30,000 people, up 40% on last year. With us today, Tony Alexander and Steve Jurkovich. And of course, gentlemen, let's drill down now into what the heck is going on in Greece. We had the elections on Sunday. The more conservative, pro-bailout forces, if you like, took the lead, but they're still trying to form a coalition. Haven't we seen this all before?
Yeah, we've seen it all before, but there's a greater probability they will actually get a government this time, given the votes for the main party there and also for the PASOK, the Socialist Party, to the side. But then, of course, they have to go to their bailout partners, the people giving them the money, and say, we want to extend the terms of this agreement by maybe another couple of years. We just want to ease off on the Greek people. Now, the difficulty there is they're really talking about things like a continued supply of pharmaceuticals, a continued supply of petrol into the country, but you're still going to get rising unemployment.
Absolutely. It's sitting at what, 50% among youth?
Among youth.
50%.
Yeah. New Zealand's rate, by the same definition for those of 25 and under, would be around 19% or so. But hey,
which is still too darn high for here.
Which is still too darn high, and of course it's partly because if you're unemployed, you're young, or if you're old, you just go and bludge off your cousins across in Sydney or Perth or somewhere
apparently.
anyway.
But listen, 40% of the Greeks couldn't be bothered or were too exhausted to go out and vote. So how much of a vote of confidence is this in the new political leaders?
I guess the number did really strike me. 40% was a big number. And look, I didn't know how much historically what the voter turnout had been. So although 40% seemed large, I don't know how much it was as sort of election on election. I think, if we had an election every few months, we'd probably, be wondering whether we want to turn up and vote as well. So I think there is a bit of realism around that. I think also probably, as Tony said, what was the other option? So, I think they had to get people involved. I think, there's a massive game of bluff in my mind, which is, Germany is not going to extend terms before there's been any sort of a commitment made. And, from the Greek point of view, I think it's realistic to say 2 years is too tough, 4 years, 5 years we're going to need. But if you're Germany, I think you'd be reluctant to relax the terms before you've even started negotiations. So I think there's a bit of brinkmanship at the moment.
Yeah.
But inevitably, I do believe that Europe will get there. I think they're very, very committed to the whole union, not just the euro and not just Greece. So I think there's a huge commitment to make that work.
But how would you feel if we were Greeks? Apparently €1 billion a day were being taken out of the Greek banks in the week leading up to the election. So how does that money all come back now? How does it work? I don't get it.
Well, look, the chances are it won't come back because I think this problem is going to continue along. And in some regards, Greece has become, while it's a trigger, it's also become a wee bit of a red herring because while we've seen this, the election completed, the second one in Greece, we've also seen a further selling off of the yields on government bonds in Spain. So the worries about the Spanish banking sector have deepened.
Huge. Spain's 10-year bond yields rose above 7% as well. I believe Italy as well. Italy's are way up there as well.
Yeah, Italy yield getting high. And this is, I guess, is the key thing. The investors have seen these governments have 3.5 years to try and make changes, get deficits under control, and have not been satisfied with what they have seen. And this bailout package of up to €100 for the Spanish banking system of 2 or 3 weeks ago. When
100 billion
euro, up to that. And people looked at that and thought, oh, that's good for the Spanish banking system, and then realised, hang on, that's money lent to the Spanish government. Their debt goes up.
Correct.
So
Correct.
It's a problem.
Yeah, it's a big problem. Here at home, is there anything we can do, anything our banks can do to buffer themselves from what's going to be surely the rising cost of borrowing more money on the world stage?
Oh, well, most definitely we've been doing it over the past sort of 3.5 years. Whenever the markets have given an opportunity to do some extra funding, I think we have all done that extra funding to basically get ourselves ready for the suspicion we've always had that another version of late 08, not as bad, but another version could come along. So chatting with some people about this just recently, the New Zealand and even Australian banking systems seem to be pretty well prepared for what could be, if it goes really bad in Spain, another closing up of those credit markets for a period of time.
OK, here at home now, it looks like the state asset sales are rocketing through Parliament, and indeed Tony Ryle is saying that it could be happening as quickly as August. Is that going to mean the price on our electricity, for example, is going to go even higher than it has been?
Well, that certainly seems to be the argument from the opposition. I would have thought in a more competitive market that you could argue that there'll be people that break from the pack and want to offer a discounted rate, or people will bundle together. So, look, I'm a believer that private ownership will drive innovation in that marketplace. So I'm not convinced that the price will go up. It's an interesting question about, is now the right time to be selling something? I guess you have to think about that. And if, aside from the government selling things, if you're a major company, would you be selling off assets at the moment unless you had to?
Yeah.
I mean, Fairfax is in the news at the moment, and they're sort of selling the jewel of their crown. So you can see why people have to do it. I'm not sure that we have to do it at the moment. The question, of course, is if you don't, you're not going to go and borrow the money. So if you want the infrastructure and you want the investment, then you're going to have to sell something. And I think that's the inevitable position we're in.
And I agree with Steve. Privatisation, I think, is pretty much a good thing. But would I focus my political capital in particular on doing that at the moment? The answer is no. I don't believe on a generalised basis it's going to be addressing what I perceive as deficiencies in a lot of our business culture. New Zealand is a lovely place to live in, but I don't need to make $1 million to enjoy the beach and the bush and that sort of thing. I'd maybe put my efforts more towards nationwide entrepreneurship sort of programs running through the entire schooling system. That's what I'll be doing with the schools. Rather than buying another fight necessarily with them, with the latest venture there, I'll be looking at, I guess, raising the financial literacy of students, doing that sort of thing. So sell assets, sure, but I don't think the timing is right.
Now, I see that the lower interest rates that we talked about earlier are encouraging a lot more rural real estate sales. What's the latest information that you have? Well,
certainly historic lending rates are very low. The numbers look strong in terms of the number of turnover of properties. I think what we're seeing, though, is that also that the size of the purchasing was up quite a lot. So not only turnover up, but volume up as well. So positive signs, I think. Talking to our lawyer clients that service the agri market, they said that they had a really busy settlement time. But I guess not the really frothy days of, 5 years ago. OK, now, none of you guys are dairy farmers, correct?
Correct.
So you won't be voting on Monday about TAF, trading among farmers. Fonterra is desperate to get this across the line. Is it going to happen?
Well, as you say, I'm not a voting shareholder, so I guess I'm free to say what I like. But the sense I got from field days is most people were in favour of the proposal.
Why?
I think from their perspective, they understand that a stable capital base is really important for a business. I think they're confident in the financial and professional advisors they've retained, which are really speaking to that key goal, which is, hey, this is a co-op. I don't want to lose control as a farmer co-op. But also they understand, like their own businesses, they do need good, stable capital sources, and having that volatility in their capital base doesn't make sense. I think the bigger farmers see that. I think, as always, it's an emotive argument. So, it's a bit of a fact-free discussion with some people.
The fact is it's opening the door to some degree of outside investment. Farmers worry it might be the thin edge of the wedge. Could Fonterra be privatised eventually, do you think? Is there a risk of that?
I doubt it very much. If there was ever a strong proposal with a high probability of success coming through, the suppliers would just probably say, right, we're going to set up an entirely new cooperative to the side. So, no, I don't see that.
OK, thanks, gentlemen. Coming up after the break, future-proof on the highways and byways of the economic world as our experts point out what's coming up. But first, New Zealand is one of the most urbanised countries in the world. So answer this in our Farmers Facts and Figures quiz. What percentage of Kiwis live in town? The answer when we return. Stay tuned. Welcome back to Money Talks. Just before the break, we asked you what percentage of Kiwis live in town. 86%, making us one of the most urbanized countries in the world. That's surprising, isn't it? Because our image is of this sort of a green hinterland.
Yeah,
surprise you?
Yeah, a little bit, I think. But there's huge parts of New Zealand where there seems to be almost no one, isn't it? So it is interesting. But yeah, it is higher than I thought it would be.
Which is surprising because with the New Zealand dollar, there aren't many places we can travel at the moment. You think they'd all be home. How's the dollar doing, Tony?
Well, it's doing very well at the moment in terms of going up. Not good for exporters, but we're almost back at about 80 US cents, back to almost 51 pence and 63 yen, etc. So then one has to ask, well, hang on, we've just been discussing these difficulties in Spain and Greece, and why is the Kiwi dollar going up? Partly it's because we're pulling back from the brink of thinking, my God, the euro is going to fall apart. So partly it's pulling back from that. But as I was saying to these farmers at field days for 3 days, people look down at New Zealand. They see us having entered the global financial crisis with the banking system having already had its problems in the 1980s and reformed. Government accounts in good order. The absence of the excess construction of houses of overseas. And with an export base from the primary sector that the fast-growing parts of the world, China, other emerging economies, want. People want exposure in some regard to the New Zealand economy, the New Zealand dollar. And my warning to farmers was, as this thing with Europe and the US goes on for the next few years, you'll get a lot of volatility, but the Kiwi dollar risks being stronger than people are thinking because we look pretty good compared with the rest of the world.
And you're confident that we're going to continue from the developing countries to have the need, if you like, for what we produce. China, for example, it is slowing down.
Most definitely China's slowing down. They could go from an 8.1% annualised growth rate in the March quarter to maybe 7.5% for the quarter just finishing. They're starting to put in place some stimulatory measures in China, but they've made it fairly clear they are not going to do what they did last time, which was the biggest fiscal stimulus as a proportion of GDP of any country out there, and huge lending surge, which has probably created a bit of a property bubble.
The property bubble. They're in trouble there, yeah. And don't forget, all the leadership changes in October. Do you think there will be radical changes when it comes to the economy or not? More the same?
No, it's going to be more of the same, which in China is progress bit by bit in terms of deregulation, in terms of opening up. There hasn't been a clear backing away. The most significant change would have been about a decade ago when government policy did veer a bit more towards favouring the state-owned enterprises. That's probably gone too far, and there is a bit of a shortage of financing to the SMEs now in China. So that change needs to occur in the near future and is something that a lot of us are going to be keeping an eye on.
And speaking of China, you know, Shanghai Beijing that bought up the Crafer farms. The same guy involved there is going to buy up another big lot in receivership, the Gulf Harbour property development north of Auckland. They're getting a bargain. Apparently the Bank of Scotland and Allied Farmers will take a loss of $121 million. The Chinese are snapping it up. It's rumoured for $38 million. Not bad.
Interesting, isn't it? I mean, very astute investment from China. I think, you know, as Tony touched on, it's, you know, the relativity really speaks volumes for me. You know, they're going to slow down and think about that absolute number. They're going to slow down to 7.5. You know, they do have a huge advantage. They have a control economy. So if they want to make something happen, they can, you know, it's the opposite of what's happening in Greece. Uncertainty can't make anything happen. China can make anything happen. I do think Chinese as a whole have a long-term investment horizon, which is a great way to think about things when you're investing in long-term businesses like property, like dairy farming. So
we should all be a little more like the Chinese.
Well, you know, you take a long-term view and act daily, I guess, is what people argue about, isn't it? But yeah, I think maybe so.
Okay. What are you going to be watching over the next 7 days now? What's catching your eye?
I guess we're thinking about, you know, it's hard to stay away from the soap opera that is the Greek coalition. So
the Greek tragedy.
Yeah,
yes,
that's right.
Yes.
3 parts. So we've had 2 parts.
Yeah.
So well.
But interesting, at the G20 summit now, apparently the European Commission representatives have said, hey, we didn't come here for a lecture from the rest of you guys about it. Actually, it all started with the American bank failure,
I think North America, he was pretty pointed around his comments there, which was, hey, we didn't come here to get a lesson from you who invented these what I think he called them unorthodox financial instruments.
Lehman Brothers?
Yeah, so it was interesting, you know, and I think that speaks to just being careful in a global economy that, you know, it's not a holier-than-thou approach. You know, we're all going to be connected, and if it doesn't work out well for something like Europe, then we'll all suffer.
What about you, Tony? What are you going to be watching?
New Zealand's economic growth number coming out in tomorrow, basically, to see if we did grow about 0.5% or so during the March quarter. But certainly these international negotiations. But the key thing people need to note here is that this situation in Europe, it will settle down. It happens all the time. A poultice will be applied and it settles down. Then it's a question of the 6 months left in the year, what will happen first? Another version of the European crisis or another US debt funding crisis, because that's coming up. They're going to hit the debt ceiling and run out of money again before the end of the year or early next year. And if they do nothing about it, there's a huge fiscal contraction coming in America on January 1st of 2013. That game has yet to be played.
Thank God we're tucked away safe and sound down here in little old New Zealand.
Cheery news, wasn't it?
Thank you, gentlemen. Thanks to my guests, Steve Jurkovich and Tony Alexander. Be sure to check out our website at country99tv.co.nz for the latest updates on rural developments here and abroad. Meantime, wherever you wander in the back 40, remember, be alert. The world needs more alerts.
Cows.
Go closer, Beck.
Their eyes are massive.
Keep the faith. See you next time.